You're watching Mirror 7 News. Stay informed, stay ahead for more news.
So Shopify has done it again. The Ottawa-based e-commerce giant has reclaimed its title as the most valuable company in Canada after an absolutely massive second quarter. This isn't just a routine update. This is big news in the world of tech and investing, especially for anyone keeping an eye on Shopify's stock. Here's what happened. Shopify reported revenue of $2.6 billion for the quarter, ending June 30, 2025. That's a 31% jump compared to the same period last year. Even more impressively, their net income skyrocketed to $906 million, way up from just $171 million the year before. Much of that boost came from the performance of their equity investments. But even when you strip that out, the core business still beat expectations, and the market responded fast. Shopify shares jumped 22% in a single day, pushing the company's market cap to $275.7 billion. That bump knocked Royal Bank of Canada out of the top spot. What's really interesting here is that all this growth happened despite a really tough economic backdrop. There were real concerns about how U.S. tariffs and the removal of de minimis exemptions, those rules that let smaller value goods skip import duties, might slow things down. Especially with tensions rising globally and consumer prices climbing in the U.S., the assumption was that Shopify's momentum might take a hit. But it didn't. In fact, according to Shopify's CFO Jeff Hoffmeister, U.S. demand stayed strong across the board. No major shifts in shopping behavior were observed, and there was no sign that merchants were rushing shipments ahead of tariffs. Merchants did raise their prices to cushion potential future impacts, but so far, that hasn't hurt sales. Hoffmeister noted that only about 4% of Shopify's total gross merchandise volume, that is GMV, is even tied to goods that previously benefited from de minimis exemptions. Speaking of GMV, WIT reached a whopping $87.8 billion for the quarter, blowing past analyst expectations. Europe, in particular, was a standout, with a 42% increase in GMV, signaling Shopify's growing global reach. And on top of that, they're expanding into new areas. Enterprise solutions, point-of-sale tech, and business-to-business services are all contributing to the company's diversification and growth. Shopify also made some major moves during the quarter, including partnerships with OpenAI for AI-powered shopping tools and Coinbase to support stablecoin payments. Plus, a big win in court. A Canadian federal judge blocked the CRA's request for merchant data, which was seen as a relief for many small business owners using the platform. So yeah, despite all the macroeconomic headwinds, tariffs, inflation, labor market shakiness, Shopify isn't just surviving, it's thriving. And based on their outlook, management is expecting that growth to keep going, projecting mid-20% revenue increases in the next quarter. Bottom line, Shopify's Q2 was a masterclass in resilience, strategic execution, and market confidence. Stay subscribed for more videos.